Thanks for joining us after lunch, and welcome to Repositioning Natural Gas and Energy Transformation, Pragmatic Bridging Resource to Pivotal Destination Fuel. It's quite a mouthful. Now, let me give a bit of an introduction to the session. So gas and LNG are a big thing in the hydrocarbon world. They're, along with petrochemicals and aviation fuels, got very strong fundamentals into the long term. So we at Wood Mackenzie expect global demand to grow by 60% through 2040. That's a little bit higher than some of the positive figures we heard this morning. And that demand growth has cultivated a booming ecosystem investing in LNG and gas more generally. Many more markets are opening up and new buyers. There's a much more diverse range of LNG producers today, with more wanting to get involved. And there's a huge opportunity to invest in the gas and LNG infrastructure that will be needed. And India imported 25 million tons in 2025 and is one of the big centers of growth. Wood Mackenzie forecasts demand here will more than double by 2050. Now, I am Simon Flowers, chairman of Wood Mackenzie, able to supply those data points to you. And I'm very fortunate today to have an esteemed panel representing different aspects of the gas and LNG value chain. To my left, we have Sandeep Gupta, well known, I think, to many in the audience, chairman of GAIL. Fatima Al-Nuaimi from ADNOC Gas, CEO of ADNOC Gas, indeed. And Stephen Kobus, who is president and CEO of Accelerate Energy. And as I say, we'll be able to talk about everything to do with the gas and LNG value chain over the course of the next 45 minutes or so. So first of all, panel, and starting with you, Mr. Gupta. The question says that natural gas is no longer seen as it was a few years ago as a transition fuel, but a destination fuel. I'd love to hear your interpretation. Do you agree with that? And what changed to make it a destination fuel?
Yeah, thank you, Simon, and thank you for having me on this panel. So, India today is consuming about, say, only 6% of total energy basket of country, maybe 6.5%. And it was in 2015 when the Honorable Prime Minister of India set a vision of taking the consumption of natural gas to 15% of the total energy consumed in India. As Honorable Minister for Petroleum and Natural Gas this morning mentioned that unfortunately we are closer to 6% than to 15%, which was the target for 2030. And there are factors responsible for that. But you are aware that even with this level of consumption, low level of consumption in the total energy basket as compared to the world average of about 25%, we are the fourth largest LNG importer in the world after China, Korea, and Taiwan. So, Japan. So, there is a great potential for natural gas consumption in the country, and I definitely see natural gas no longer as a transition fuel but as a destination fuel. And there are reasons for doing for assuming so. Natural gas on one front is extremely safe in operation as compared to other fuels. It is less polluting, much less polluting, and also in energy terms, it is less costlier than the competing fuels. So this creates a good scope for consumption of natural gas in the country. Natural gas also, from India's perspective, about 50% of the natural gas consumption in the country is produced domestically as compared to other conventional fossil fuels like crude oil, where the requirement of import is about 90%. So this also is a good reason why India should be importing more natural gas than to the other conventional fuels. Globally also, compared to crude oil, the production of natural gas going forward is going to go very high. There are new production centers coming up besides Qatar, and US. There are many other centers. The projects are going in Argentina, in Alaska, in Canada. So there will be a lot of new channels of natural gas which will be available to the world and especially to India also, considering its consumption. Now, as of now, natural gas primary consumption in India is fertilizers. The affordability uh, for fertilizer plants is not an issue because the urea plants in the country operate under a regulated scenario where they get the subsidy for whatever cost difference is there. So there, the consumption is definitely likely to remain there, and in fact, to substitute the imports of urea which are happening, we are going to have many more new plants coming up, which will also consume natural gas. The second biggest consumption center in the country is city gas distribution, where you may be aware that the entire country has been authorized by the regulator for city gas operation. And it is the fastest growing segment as far as natural gas is concerned. And the consumption there is in the area of CNG for transport, for PNG for domestic, industrial, and commercial sections. So there, the growth is very positive, and since many of the geographical areas were authorized very late, so the consumption in those geographical areas is going to go very high in future years. As per PNGRB's estimate, which is a regulator for the country, Petroleum Natural Gas Regulatory Board, from the present levels of about 190, 195 MMSCMD consumption of natural gas in the country, they expect that in a, scenario where no major changes happen on the fiscal front, the consumption is likely to grow to about 300 MMSCMD by 2030, which is a good 50% jump from the current levels. And if there is a fiscal, say, scheme which is uh, supporting natural gas, meaning that gas comes under the framework of GST, which will avoid the stranded input tax credit, and also the 14% excise duty on CNG goes with GST implementation. Then in that scenario, PNGRB estimates that the consumption will grow to 365 MMSCMD by 2030 itself, and maybe above 600 by 2040. So I believe because of the uh, safety consideration, because of the emission considerations, because of the cheaper fuel, and going forward, since many projects are coming world over, that will render natural gas uh, in surplus, and it will be affordable for countries like India. And I believe that there will be consumption of natural gas to greater extent, and I believe that it is going to be the destination fuel, given the uh, polluting nature of other conventional fuels, other fossil fuels, and also the problems which are there with renewable energy or green hydrogen, which we can discuss during next questions. Thank you.
No, thanks very much for a really good answer. And you mentioned the word affordability, which we will tackle shortly. But Fatima, I'd love to hear your thoughts about, by all means, talk about destination fuel. But I'd love to hear how you think of the role of gas evolving as countries which are continuing to push forward with the energy transition, but how gas's role might change or evolve, I say, with the transition and in countries of rapid economic growth.
Okay, good afternoon. It's good to be here. Um, so we've been talking about LNG being a bridge to a destination that is different, depends on which scenario you're looking at. But I think we are a bit humble in the gas and LNG industry. We try to show that we are selfless, we're here only to complement others, or we step in when required. But in reality, the facts on the ground today are different. And I think if we look at the capital allocation, if we look at the number of projects that got FID or in the way of getting FID to increase the capacity of gas and more specifically LNG, you can see that this is definitely this is definitely a part of the energy mix that is going to be there for very long time and an integral part of the energy mix. And we are in ADNOC as well, and ADNOC Gas. We believe in this. Hence, within ADNOC Gas, we're investing more than 20 billion just on the domain of ADNOC Gas itself to increase the capacity, our processing capacity, by almost 30% by 2029. And on the other side, we can see that the qualities of the LNG are, other than the DNA of it, which is the lower emissions, and it's stepping in. And I have a say that LNG always for the rescue. So when the wind is not blowing, when any issues are in the system, LNG and gas is the one that steps in. And I think the dramatic change in how fast countries can tap into the LNG system is contributing to this, including how fast the FSRUs and the regasification systems can be tapped into. And more, we will start seeing more liquidity in the market with all of these projects being sanctioned. So definitely LNG is going to be here for long as a core part of our energy mix. And countries like India, where we've heard this morning, and we know that 30% of the incremental energy needs are going to be driven by the economic engine of India. Proximity to centers where this gas is produced, which translates into the deals that we've had and we've announced with India, the fact that it helps both producers and consumers to be complementary of each other and building on a relationship that really lasted for decades. So definitely, capital has spoken when it comes to the role of LNG people, and bankers are not going to invest for an energy source an infrastructure that will last for just a few years.
That's so interesting. I mean, I'm thinking as you were talking there about gas's role, I was thinking about some countries where the power sector already has around 50% of output in renewables. It's happened in a number of places in Europe and elsewhere, but Germany is a good example where they're actually building 20 gigawatts of new CCGTs to accept gas, all of which will be imported gas. So it very much plays to your point that it's very difficult, even with the best intentions, to take gas out of your system, energy system.
So I was in Norway this summer, last year's summer, and for Norway to have big proportion of its energy sourced from renewable, it makes sense, given the hydro power that is. I think we oversimplify sometimes when we say one solution will fit all. Depends on where you are. Some people are blessed. The way we are blessed, for example, with the petroleum resources and gas, some are blessed with the sun, the hydro, yet the overall, especially the growing markets, there is an increased role for gas to play in these to satisfy the requirements of their energy.
Thank you. Stephen, turn to you, and Fatima mentioned FSRUs there in her talk, floating storage and regas units. That's a big part of your business, and just goes to show you maybe have a slightly different perspective. I still like to think of the same question, if you don't mind, about how you see it as an infrastructure provider, among other things. Do you buy into what you've heard from Mr. Gupta and Fatima, the positive story for gas?
Yeah, no. Well, first of all, Simon, great to be here. Have the highest regard for Sandeep and Gail, and have admired Fatima for many years. She's one of the real superstars of international gas. It's great to be here.
Come maybe a bit closer to your microphone.
Am I too far away?
Just
I've
a little bit.
I've been accused of being too quiet, Simon. So, to get started, it's funny. Just a few years ago, people would be criticized for saying LNG was a destination fuel, but it's absurd. And I think the world, as Fatima says, capital spoken, but that doesn't matter. What matters is it's needed. I mean, I really, what Dr. Sultan said this morning, it's an energy addition. It's not an energy transition. There's more and more need. There's been all of this liquefaction infrastructure that's been added, and that's fantastic. It is going to lead to greater affordability. I agree with that. Where the capital has not been deployed adequately has been in the one bottleneck that exists, which is in the regasification capacity. And since we're in India, and India is going to drive so much about LNG in the future, I absolutely agree with Sandeep on that. I think what goes unrecognized in this energy addition fuel is how prudent India's already been. I mean, by adding these terminals like Dabhol, Hazira, Dabhol, all of them, it's 52.7 million tons of capacity. So maybe half of that was utilized in 2025. That means you have this regasification capacity that is available as this commodity, has greater access, more affordability. That's all well and good. India needs even more of infrastructure to access this curve, the supply curve, and benefit from it disproportionately as I think they can. So I think India has been an example to the rest of the world. I mean, LNG, it is not a switch that you flip on. It is a system that you build, and you need to get ahead of the demand if you want to enjoy the greater availability and affordability. And I hope that's going to happen here. But it is a destination, but that's something that should be welcome because, frankly, what other fuel can balance renewables perfectly, can be a baseline for people who need it, who can add to reducing pollution while helping renewables scale. I mean, it is the ideal fuel in many ways, so I'm glad it's part of a permanent addition.
Thank you. Now, you might have noticed in the audience the word affordability was mentioned quite a lot this morning in the opening ceremony, and we've had it twice already today. And I think it's very central to the story of India's gas industry, cost of imported gas. Now, Mr. Gupta, India is seen as a price-sensitive market. I mean, I think it's probably a truism. And when we look at what happened over the last 2 years, where prices generally been quite high, as you'll all know, but prices dipped to about $8 an MMBTU imported LNG in the first half of 2024, and LNG demand jumped by 5 million tons. And then when prices went back up again in 2025, the imports went down again. So I think it's a really good example. So I wonder if you'd expand on this point about affordability being a key factor if LNG is to meet the country's targets or the government's targets. And in Wood Mackenzie forecasts, demand will double or even triple over the next decade and a half or so. Love to hear your thoughts on that.
Yeah, I fully agree that India is a very, very price-sensitive market. And a lower price for any fuel, and this natural gas also, is definitely a big factor in ensuring the consumption or increased consumption of that fuel. Now, as I mentioned, the consumption of natural gas in the country is the largest share is in fertilizers, which is agnostic to price because of the ruling subsidy scheme for fertilizers in the country. And we believe that regime will continue for many years to go. So that consumption center is sort of protected and is agnostic to the price movements. The second consumption center is city gas distribution, and this is the fastest growing segment and perhaps would overtake fertilizer in a matter of years. There, the biggest sector in city gas distribution consumption is the CNG for vehicles. And as I mentioned, natural gas is presently not covered under GST. And presently, there is a tax called excise duty on CNG when it is supplied to vehicles, which is at the rate of 14%. If I can translate into numbers, it is 10 rupees per kg, or I can say it is maybe about 1/8 of the price, pump price. So if gas is covered under GST, this 14% excise duty goes, and it becomes extremely comfortable for the consumers, because definitely CGD companies will reduce their pump prices, and then the consumption of CNG will be very comfortable for the consumers. So as far as CNG, which is the biggest segment of CGD, is concerned, there again, I believe that with coverage of natural gas into GST, which again is a matter of time only, it is certain that this will come under GST. It is only pending because of the fiscal considerations of the states. This is a federal structure. So there again, besides fertilizer, the CNG being the biggest segment area, consumption area, will again be protected and will not face the wrath of high prices. The other area is power, which is again very, very sensitive, and at these prices, whether it is even even at $8 per MMBTU, it is not viable for power, and the power consumption takes place only when there is a peak power demand in the country in summer months. So there definitely price affordability is a big concern, and similarly for other sectors like refineries or petrochemicals or other industrial consumptions. But we believe that with the since we India and companies like GAIL have their supply sources which are linked to oil also and which are linked to HH also, so there is a fine balance of basis also. So we believe that with softening of Brent prices, the oil-linked gas (LNG) will definitely be much affordable from the current levels. It is also said that Brent may drop to $40, but if it is not, even if not at 40, even $50 will be very comfortable for a country like India. As far as HH is concerned, with the fresh wave of projects coming in US, we believe that maybe 27 onwards, the HH prices should also soften, and that should provide good affordability for consumers in India. So, given the price projections which are available, we believe that the prices will be very comfortable, and the gas consumption in India especially, will go up from here to greater levels.
It's a very thorough analysis. Thank you for that. And if we think about the next 5 or 6 years, where, as you mentioned latterly, a lot of new projects coming on stream, we certainly believe the price will be at quite a modest level, perhaps below $8 for periods of time. The spot price into Asia and indeed Europe. It seems like quite a good opportunity. And do you think, and that's not so much oil price linked contracts, but spot taking from the US mainly, or whoever's going to sell it at that price, I suppose. Do you think Indian companies will be quite opportunistic just to buy more, fill the spare capacity that's in the market? Because the market's obviously there, as you say, in the different elements, whether it's city gas or CNG for vehicles.
So, as far as meeting the demand in the country is concerned, the demand has to be met whatever be the price levels. Given that the entire country has been authorized for city gas distribution, given that the fertilizer plants have to be operated because fertilizer otherwise will be imported. The consumption in the country for natural gas will definitely be there. The levels of price will determine the rate of growth. So if the prices are affordable, then the rate of growth will be very high. And definitely Indian companies, as such, at these price levels, have also tied up good volumes, and on a regular basis tie up new volumes. And we believe that with softening of the prices, definitely there will be more contracts, more long-term contracts, which will be lined up with these companies.
Thank you. Pat, I'm going to come to you in a moment, but I'm going to follow on this train of thought with Stephen. You touched on it a little bit about the infrastructure, capacity utilization, but it seems to me that there's obviously a little bit of maybe undercapacity, you say, but that might change a little bit when if prices do fall and demand picks up. And what do you think about that? Is this a great opportunity for a company like Accelerate to take advantage of it, or to fulfill the demand needs of India? I suppose might be a better way of putting it.
I think, Simon, I'd simply say Accelerate obsesses about the downstream portion of the LNG value chain. I mean, it's a great commodity. It's a fantastic commodity. It's also cryogenic and super chilled, and it needs specialized receiving infrastructure. And that infrastructure has received nowhere near the tens of billions of dollars that have gone into liquefaction. So yes, we're excited about the role we have in the world. You know, our fleet has our newest floating terminals coming out of Korea in a couple of months, going to our Iraq project. It's going to take our overall regas capacity up to about 55 million tons. It's not enough, though. There needs to be more investment spent on regasification, because affordability is great, but if you can't turn that into a vapor and distribute it, it doesn't do you much good. So we feel like we're on a mission. We've known that's a critical component of this, and we are all over the world, you know, Brazil, Argentina, Finland, and we're anxious to do more. We want to enter India. We want to be a good partner. There's a lot of discussion this morning about reliability. I think every market that Accelerate has served over the past 20 years knows we're a good partner, good steward, or best in class. Our operational uptime last year was 99.9%. But it's not just that. It's knowing that if a sovereign or a market is counting on you, that you will be dependable for them. And we take that to heart, and the world needs a lot more of that. This is, we're going to be happy to do whatever model may work here. This is going to be an incredible market. We're not going to be hidebound to any particular approach we've had in the rest of the world. I tell everyone we want to provide what someone wishes to buy. That might be a fully integrated terminal like in Iraq. We're doing the floating terminal, the jetty, the supply. That may be one component. That may be a minority stake. The main thing is move, like add capacity, add the ability to enjoy this ride that's coming, this wave. And frankly, just from what I've seen of India, I think they can exploit this wave. I think they can be one of the major beneficiaries. I think with the right policies, partnerships, open up even more capacity, just as they have done. You know, they could be perhaps the real winner of the coming LNG wave and set a new standard. So, and look, that's for this intense demand. We're also in places like Brazil with Petrobras, where they really just use it as a backstop for their abundant hydropower whenever, every 4 or 5 years there's a drought. Happy to serve that need too. It's all about having a dynamic, robust system, enjoying whatever energy security one's particular market needs. And all those different forms of energy security vary, whether it is backstopping a very ancient intermittent renewable called drought, or you talked about Germany with the Dunkel floats or dark lull. When all the renewables go offline, they still kind of want electricity. It's great for that. So the amount of investment is tremendous. I mean, we just put $1 billion into a Caribbean platform for a small scale model. I think small scale, we see that being deployed in other regions in the world, possibly India too, where you get into a hub and spoke, smaller vessels, breaking bulk, trucks, as we're using there. Use every tool in the toolbox. I get back to, it's an energy addition. use all that. It's all about going the last mile. Get this wonderful product to an end user. Invest in the last mile. So we want to do that in any way we can.
Well, thank you, and we've heard about affordability from infrastructure players essentially and buyers of LNG, but Fatima, affordability is even for a supplier is an important factor. I'd love to hear your reflections about affordability. Why affordability in India and other developing markets is important for you for helping the economy in its growth path.
So affordability, I believe, is a relative word. Depends on where you're talking or who you're talking to. But I'll reflect on our conversation with our Indian partners throughout the past years. And I can see that we were fixated at a certain point on the terms of prices earlier on. But as the dialogue evolved, we've seen that realization that the economic resilience is not just built on the cheapest source of energy. It's also built on the source of energy that you can plan around. And competitiveness comes from predictability, not volatility. So if I just elaborate a bit here, predictability protects economies, especially the fast-growing economies like India. You would see that those economies suffer from the volatility. And if I just limit to LNG, for example, we know that the spot market fluctuates 3 times the long-term contracts. So having a long-term contract creates that kind of stability to plan around and to build industries around and to invest in infrastructure. So we've heard about the investment in city gas, we've heard about expansion in fertilizer. All of this requires that kind of long-term vision. In our case, with our Indian partner, this translated into 3.2 million ton signed just in the past 18 months or so. So this realization is having that traction and translated into now reality on the ground. As ADNOC Gas, we will be supplying 20% of our contracts, in fact, by 2029, where Waste LNG starts, to Indian customers. There is also the scale that we have in Indian market. So growth of 3 to 4% is meaningful in a size like the Indian market. And in order for these industries to stay competitive, it's important for them to have that long-term visibility over what's coming their way when it comes to the energy market.
So I listening to your story there, I absolutely get that. The predictability is fine in a market where you're going to see LNG demand double or triple as we suggest. You can't be absolutely certain what it's going to do year by year, but the destination, to use that phrase, is obviously there. It's very different in different parts of the world, where I imagine maybe less appetite for signing very long-term contracts, for example. Is that something you find? It's a very diversified buying community out there, even though gas is going places. Some countries are trying to decarbonize quicker, uncertain about their policy. Do you find that?
So it's funny because as ADNOC Gas, we're a supplier in the UAE to the local market as well as an exporter. So when the customer, like in Japan, or they tell us about the uncertainties that they're facing, we're living it because we're supplying. So we know about the uncertainty when it comes to how the energy mix would look like and how much nuclear is going to be integrated into the system or coming back into the system. We get this, and this is, I think, this is what makes the conversation easier And sometimes within your contracts, you have to reflect some kind of a reality as well.
Yeah, and I think it leads to a world where consumers or buyers, if you like, are have quite a diversified portfolio of long-term contracts and some short-term space, depending what the price is and what have you. They will have say 3 to 5 year contracts and buy some on spot, and suppliers and portfolio players will also have to adapt to that and be able to serve it.
Yeah. So within ADNOC system as a whole, we've evolved throughout the years. So we've evolved from that one destination, long-term contract, a destination going to Japan, into more of a portfolio. Our strategy for the base indigenous, let's say, production is at least securing an offtake for 80% of that volume through a long-term contract, because we also like predictability to some extent and balancing it. But within the ecosystem of ADNOC, we've also established the trading desk, which capitalizes on these long-term flows and generates an upside flexibility as well as margins. And I think the boundaries that we've had some time back between someone called producer and another called consumer is becoming blurry. You see more and more from the consumer side becoming also a portfolio players, and the same thing from the producing. We're becoming more of and working on optimization and investing in different nodes as well, and creating that kind of portfolio. So long term, if there is a bridge, I would say, on how the industry is operating as LNG, I can see that we are going into this more liquid, more dynamic industry going forward.
Yeah, and you just used that word. I was going to sort of conclude your point by saying you're describing a more liquid market. It's going to be it's not only going to grow, but it's going to be more diverse, more liquid, and more efficient market. I would say, and you can send cargoes to where it's needed rather than something that's fixed, which I think is good for everybody. Stephen, you've talked a little bit about this, but what you touched upon was you mentioned Brazil, for example, which is where and I think you've got Jamaica as well. I'm just wondering, in this more diversified ecosystem, more countries looking to, not necessarily for giant contracts, what you see of the potential future on a sort of 5 to 10 year view for a country like Accelerate? Are there boundless opportunities, or are they sort of individual niche opportunity, each one slightly different from the other? I'd be keen to hear your thoughts on how you might develop the business.
I think every market has its own nuances, but Simon, when you back off and look at the global trend, it is going to be adopted as a fuel in more and more places. Those places will include throughout the global south. It's still going to be needed in mature places. We're in Finland and Germany, and I think they will continue to take as well. But we are solidly, we're headquartered in Houston, but all our time is spent all over the world, being a reliable partner to very diverse markets and sovereigns. And I think we realize you can't tell somebody how they need to use it, how it should fit into their energy system. We go places where it immediately becomes just a baseline need. But, another example is if somebody has an indigenous gas supply, what's the decline curve on that? Is there already some downstream infrastructure, but local production decline curves are accelerating and causing there to be an intense need to add it to the system. That's one scenario. Energy security is always there. I don't think anyone's ever going back or taking in energy security for doubt. Or having in doubt. In fact, Minister Singh Puri this morning, I loved his emphasis was on availability, affordability, sustainability, but he said energy security is survival. I mean, it quite literally is to an economy. I mean, it's literally an economy's lifeblood. So you have to ensure that your economy's lifeblood can flow. So we know it's going to be out there. It's going to be in pockets. That's why I was kind of excited about deploying our small scale model. I mean, some of our FSRUs will push nearly 5 million tons of LNG a year. That's great. That's useful in those markets. But others are going to need far smaller parcels, broken and distributed across geographies that may not be able to be reached by pipe, may not be able to be economic by pipe. So there are going to be all types of markets that, I think the floating import terminals of one form or another will have viability, because this wave's not going to be absorbed just in parcels of 5 million tons. This wave there'll be some of it. Some of it's going to be 500,000 tons, 1 million tons, and it's important to get to serve all those people who will have the same need and the same benefit from it. So you're probably feeling it. I'm really excited. Our company's excited. We've been doing this for 20 years, but we're probably as excited now as we've ever been about where this global industry is, and quite frankly, the difference it can make in ordinary people's lives. Because you add affordable energy, I mean, you get inclusive growth. You get inclusive growth. You get a more buoyant economy. You get an increase in GDP. That raises living standards. I mean, it's hard not to be excited about what the wave of LNG will bring to bear.
And just a quick follow-up on that. You didn't actually mention Jamaica, I don't think, did you? Which is a business you've acquired. But I'm imagining it's not the biggest thing you've got. But I wondered, tell us a wee bit about it. But also, I mean, is something like that, can you leverage off that into parts of India, for example, just putatively?
Well, I mean, certainly
that aren't touched by Gale's pipelines just yet.
Yeah, no, I mean, it's obviously you need small-scale distribution for an island or an archipelago like the Caribbean. We have a power plant there. I said we bought $1 billion of import terminal, small-scale import terminal. We're distributing by small-scale ship, by truck, by everything, and we hope to distribute that around the Caribbean. I think it will be a model. I'm actually excited also about resiliency. Because soon, we'd been there 4 or 5 months. We immediately started hardening for hurricanes. We understand hurricane or cyclonic activity. Category 5 Hurricane Melissa came through Jamaica, and the Prime Minister said, "Look, you've proved the point on the resiliency of thermal power. You promptly moved the FSRU out of the path. You were back online immediately. We were flowing gas right away. Our trucks were delivering to every small scale off-grid who had LNG, had their power back online when others didn't. And we also delivered about 75,000 kilograms of relief aid to the people of Jamaica immediately too. So we can deal in hostile environments. We're in the Bay of Bengal at the moment. We can deal with it, and we can be a good and reliable partner, and we take pride in serving the people of the markets that we're in.
Thank you. Sandy, we know the demand is there as long as the price is right, if you like. But you're still charged with delivering the infrastructure and getting the gas to market. So I'd love to hear your thoughts about what are your top priorities? What have you got to do, say, in the next, it's only 4 years till 2030 to make sure get as close to that government target as you can. And what's the main challenge?
Notwithstanding the price, we as a national player, national company, we are committed and we believe that infrastructure must precede consumption. And towards that end, we have laid a good infrastructure for gas consumption in the country. So if I start with, say, terminals, import terminals for LNG, uh, PLL is the Petronet LNG Limited is the largest terminal operator in the country, and GAIL is a promoter of that company with 12.5% stake along with other players. And they operate the largest terminal in the country, 17.5 million metric ton, which is expanding to 22.5, which is not counted in your 52.7. So, and we have our own terminal at Dabhol, which is having a present capacity of 5 million ton, but which cannot operate at 5 million ton because of the heating requirements not being there for want of our plant operation at Ratnagiri. So we are putting up our own facilities, and we will not only we will operate it at 5 million ton, but we have plans to expand it to 6.3 million ton very soon, and later to much higher levels. So as far as terminals are concerned, the terminals in India are only operate at about 50% of capacity. So there is enough spare capacity already available. And already many terminals are expanding their capacities, like I mentioned about the Dahej. We are expanding our own terminal. A new terminal of PLL is coming at Gopalpur that will have 4 million ton capacity. And there are other players, I cannot talk on their behalf, but I am sure that there are other players who are sitting looking to the increase in the consumption of natural gas, and they are ready to expand their terminal capacities in India. So as far as import infrastructure is concerned, there is a sufficient infrastructure as of now also, and there are players who are ready to expand that infrastructure to greater levels, including GAIL. The second is pipelines. So, as such, we have about 25,000 kilometers of natural gas pipelines operating in the country, of which GAIL owns 18,000 and will be commissioning about 3,000 kilometer pipeline very shortly. So, and we have plans to take this capacity to about 34 to 35,000 kilometers in a matter of years only. And since the entire country has been authorized for city gas distribution, it is the duty of the regulator for the play of all the players to see that the natural gas pipelines reach to every consumption center of the country, so that they are not sort of forced to bring gas to their geographical areas through unviable means of road transportation. So there also we are very committed, and we are laying infrastructure. Fortunately, in the country, there is a regime which allows that at least nominated pipelines are allowed a assured return of 12%. So many of our pipelines were laid in that regime, and they are enjoying the assured returns. But even for the new pipelines which are awarded on bidding basis, we have been securing pipelines, and we are committed to secure more authorization for the pipelines. And the regulator is very committed to lay down the roadmap of putting up new pipelines in the country. So, and as far as the city gas distribution, I already mentioned that there are 307 geographical areas which covers the entire mainland of the country, and it is already authorized, and various entities beside GAIL are operating those geographical areas. We operate 72 of that 307 geographical areas, GAIL and GAIL group companies. So we do about 23%, 22, 23% of geographical areas is within our fold. But within those geographical areas, I am proud to inform that we own about 40% of the CNG stations and about 65% of the domestic PNG consumption connections. So, notwithstanding the consumption levels, we are expanding our infrastructure in city gas distribution also, and within those city gas distribution, the CNG stations and the domestic PNG consumptions connections also. Now, to increase the consumption, we have decided that we will also invest in those consumption areas. So, we have recently signed an MOU with two of these states to put up fertilizer plants. We already have presence in fertilizer plants as a joint venture partner, but these we are doing at our own. So that the natural gas consumption in the country can be taken forward. So, as far as infrastructure is concerned, we are very committed, and as a state player, it is our belief that the infrastructure should be laid ahead of the consumption coming up, and we are not shying away from that.
Not shying away from it and not short of opportunities, I think, would be a summary of that. Sounds very good. Now, to close off the session, Fatima, this is an industry that doesn't work for solo players, if you like. And I'd love to hear your philosophy about partnership and collaboration and how important that is, you think, to achieve all the things we've heard from all three of you today and build a great gas business for India and elsewhere.
So if we've established that LNG and gas is not just a bridge, it's a backbone of the growth of the economy, and the market is changing in terms of dynamics, that does not discount the fact that there should be a partnership when it comes to the consumer buyer seller relationship. And I think in ADNOC, we've exported the first cargo in 1977. So if anybody knows anything about partnership, it would be ADNOC Gas. The first lesson I would say we've learned that that you have to respect the partner. You have to be transparent, and this is a relationship that is not transactional in nature as much as it is an investment for decades. The market will have its up and down. We've seen prices hitting record high, yet we did not at all in any chance break our commitment. Since the 77, we did not default in any of the commitments towards any of our customers. So investing in the relationship, full transparency, and as they say, in sickness and health, you have each other's back, and this pays off because we've seen it. I went to our investment committee and I promised them for Ruwais LNG that we will have 80% of the LNG committed before FID. And it was almost, in my mind, it was mission impossible. How can we do this in months? But the market reacted, and this is the credibility that we built across the years. So we've managed to secure 80% of Ruwais LNG through long-term contracts, including our Indian partners here, in just 16 months. And this is how partnership, I think, and this is how you invest in the relationship for the longer term.
Well, in a world that seems to be becoming ever more transactional, it's a very uplifting point you've made to finish our session. So Sandeep, Fatima and Stephen, I'd like to thank you for your contributions, and I think they deserve a round of applause, please.